you want to learn about Elliott wave, and you want to know why Elliott wave will always still be relevant. Well, it's very simple, and it is simple because new concepts that you are hearing about, quarterly theories or SMC or anything that involves anything that's recycling just in a new way, is also based off of Elliott wave. Now, previous videos I've dropped 3 years ago, I actually talked about Elliott wave because this is actually how I got into trading. I spent 4 years learning Elliott wave, 1 year dedicated specifically on Elliott wave and no other theories, no other concepts. And this was like my very first year, which was 5-6 years ago in trading. So it's amazing how now Elliott wave is coming back, but in a whole new way of thinking about it. So what I want to do is talk about how I use Elliott wave, why it's still relevant in a lot of these other theories that you guys hear about now. And I want to touch on how I keep it simple now. I used to talk about this very faithfully and very detailed until I figured out a loophole around Elliott wave, which made me simplify it and became my 3-man standing strategy and 3-man standing concept that I talk about now. So I do want to go into my 3-man standing concept, and we're gonna get into Elliott wave. All right, so here you guys have it, my 3-man standing phases. So basically what this consists of is multiple things. One, impulsive wave. So in Elliott wave, you have something called the motive wave and you have something called the corrective wave. The motive wave is what we call an impulsive wave. There's 5 cycles in an impulsive wave. A corrective wave is usually your traditional wave theory that you guys are familiar with, which is your triangle, ascending triangles, descending triangles, open, close triangles, or anything when it comes to flag patterns or any other patterns that you can think of. Well, with the 3-man standing concept in depth, what it consists of is, once again, impulsive wave, finding the S&D inside that impulsive wave, which typically, we'll break that down a bit. It basically means wherever your wave 4 and wave 2 is at, that is considerably your supply and demand area or your key levels structure. And then also looking for what we like to call price action, known as P&A, whack off, which is another form of entries. Or if you look at it in the Elliott wave format, it is called a diagonal pattern for entries. And these are all reversible patterns that you look for. So no matter what time frame you're on, 1, 5, 15, 4-hour, daily, weekly, you see this in every time frame because this is all fractals, and it does not matter what time frame you're on. The better you get at figuring out on a higher scale, if you can say on a higher scale you see the overall 5 waves, and then you go on a smaller scale and you can see another 5 waves inside that, that's where it gets complicated. But that's why you guys need to subscribe, because that's where we're going to be going moving forward. So now look here, you guys see that you have your 5-wave cycle, which is basically 1 move up, 1 pull back. The first pullback is what we call wave 2, and then the longest wave considerably in theory will usually be wave 3, which can extend out all the way to 2618 on a Fibonacci retracement or Fibonacci extension. And then you got wave 4, which is typically your longest wave, which typically means it's a 5-wave cycle, and that is usually your longest triangle patterns, which you do see here. And then your last wave is wave 5, which sometimes can overlap past wave 4 or wave 3, which is this here, or essentially it can pretty much create a double top here. So once 5 waves is completed, a lot of people like to enter off here and say I'm gonna buy it, but since we talk about Elliott wave, we wait on the cycle to complete first, right? I call this the 3-man standing because, once again, that's how I simplify it. But we wait on that cycle to complete because once that cycle completes, we then enter again. And a lot of people don't understand is that in Elliott wave, once again, if you see it on a higher scale, you will also see it on a lower scale. So if I just established that 5 waves are in every trend, imagine that this whole picture here was a 5 hours, let's say a 4-hour time frame, right? We know that this entire cycle here could just be one big wave, right? This whole thing from all the way down here where my mouse is at, going all the way up, is just one wave, even though there's still 5 waves inside of that one wave. That's what I mean by fractals. You see this on a higher scale, you see it on a lower scale. So if you guys pay close attention, this all right here is one wave, and then this pullback right here is another one wave. And then that being said, after we establish the correction has been completed, and like again, we wait on either a PA pattern, price action pattern, like a double bottom, or whack off theory move, like a accumulation, redistribution, what we like to call a spring, that which is the last move before it actually goes up, or diagonal pattern, which is called in Elliott wave theory. That's what we look for. So now let me just kind of show you guys a little bit more, break it down just a little bit more so you can understand. So I said earlier, you have your impulsive and you have your corrective wave. Your corrective wave is known as an ABC, which is 3 waves, or ABCDE, which is 5 waves. Essentially, when you're looking at a motive wave, you're only looking at a trend either going up or trend going down. So if you pay close attention to my blue lines, these are all trend lines, or what I like to call pretty much my impulsive moves. So wave 1, wave 3, and wave 5. Inside of wave 1, you will have a consist of 5 cycles, and then inside of wave 3, you have a consistent of 5 cycles. Inside of wave 5, you have a consistent of 5 cycles. However, with wave 2 and wave 4, which are typically your pullbacks, you either will get a consistent of 3 cycles to 5 cycles. Really depends on the market conditions. You will never know until it happens. But there's ways around to knowing when it could possibly end so you can get in. When I teach and when I usually when I was teaching this very faithfully, just Elliott wave theory, I always told everyone to wait on wave to complete. In theory, Elliott wave will always say you will never really know until it breaks that previous high, but there's still loopholes around it, and it goes in with finding the supply demand inside of wave 1 and then entering here and then just taking TP at this high here, because this could just be one big wave to go up, and that can happen because that can just be the 5-way cycle. So that's kind of what the main goal here is. Now, this is just a very generic basics, because I mean, we can go into way more in depth, and we will. And that's where you guys should subscribe and comment down below if you like these videos, because it just lets me know I'm actually trying to give value to y'all. But there's a lot more into this, but I don't want to get into too much detail right now with that, because we got to work our way up to this level. What I do want to show you is some examples on the live chart so you can actually see this in the live market. All right, so I want to show you guys an example of what an Elliott wave move can look like as far as cycles. It can be very complicated because you're new to this and maybe you don't fully understand it yet, but it will become second nature once you understand where we're coming from. So basically, ways to measure Elliott wave is using the Fibonacci extension and even Fibonacci retracement. The Fibonacci extension is obviously the traditional way of using to map out the Elliott wave moves. Now, Elliott wave can be very difficult because there's a lot of different scenarios to this, but once again, once you know A to Z, you can kind of just figure out from there how to just use it in your own way, and that's what we're going to be talking about in my own way. That is it. So how I look at Elliott wave without me even talking about it, this is how I see it in my mind visually. I know that there's essentially 5 waves and a trend, right? And I'm gonna make this different color. And in this trend, I know if being on a 15-minute, I know if I can essentially figure out when the first wave ends, and the only way I will essentially know when wave 1 ends is 2 waves. There's one way I used to do, which I'll talk to you guys now because you can still do this, but I don't do it because it's too much. But I used to go on a smaller scale, and I used to use my Fibonacci to figure out the 5 waves inside here, because if you guys can measure the 5 waves inside of just wave 1, you essentially know when wave 1 will actually finish. So what that really means, if we go back, let me just talk about this part. What that really means is if I can go from a bigger scale and look at wave 1, and then from wave 1, I can zoom inside of wave 1 and look at all the little specs and details, and I can take a pen and paper, and let's say you're real good at math and you can measure everything, almost like you can guarantee and predict the future, you would then essentially know when the bigger picture will end. So if you go into a smaller scale, like a 5-minute time frame, and we were to map this out 1, 2, 3, 4, 5, 1, 2, let's just say, I'm not really doing the math right now, but I'm just trying to give you a pinpoint. But you see here, if you can find an idea of predicament of where wave 1 all the way up to wave 5 can end, and you can figure this out, that's what we're going to talk about in my next videos. But once you figure that out, you got an idea now. So then now what happens is if you trade supply demand, or if you trade quarterly theories, or if you trade smart money concept or ICT, which are like the most common things that everyone's talking about now, just imagine adding that one variant, and let's just say right here was a key level that you already had from all the other theories and concepts, and maybe you might have had additional 3 more here, right? And you're like, I don't know which one would be valid. Well, guess what? Now you have a better advantage of knowing that this is more valid than these, because your whole Fibonacci with Elliott wave had aligned with everything else that you're familiar with. So now what happens next is go back to that higher scale, like the 15 minute. So now we're in the 15 minute. Let's just say that we have an idea that market is going to hit here. The moment it does, we can do 2 things. We can tell ourselves we want to trade for the pullback, which is wave 2. Remember, wave 2 and wave 4 are the only pullbacks in a trend. So if we want to trade against the trend, absolutely. If that's your style, it was my style, but not anymore. Instead, I'm wait to complete, and ways to figure that out is using the fib retracement. Once again, in the whole Elliott wave, they talk about how far wave 2 can go down to, which can go all the way to 100%. That's true of the Fibonacci retracement. However, the 50% is all I need to see, right? Now, get this. Inside of wave 2, you have what you call ABC patterns, which can look like this. ABC patterns can be a descending triangle or descending a pennant. It could be any type of pattern, right? It can look like this. It can look like this and expanding. It can look like this. It can even be 5 ways looking like this, 2, 3, 4, 5. However form it wants to form, it can be any of those. But if you look closely here, this looks really complex, but this is the pattern here. So if I was to take away this for 2 seconds and take away the Fibonacci, just take away all of this extra noise so you guys can really see what I am seeing. Take away this. I want you to look at what this looks like. You have A, B, and then C. 3-wave cycle. And then after that, it went up. So in the 3-man standing concept, this is literally how we trade it. And this is literally what I preach about so much, but I don't get into too much because once again, you got to know a little bit about Elliott wave theory. You got to know a little bit about supply demand and market structure and the basics of all of that before you dive into some of these theories. So generally, in order to map out this 3-man standing concept, well, you got to subscribe to the channel, because otherwise I can't give you all in depth. Now, this is my point of view of seeing it. Otherwise, you can watch any other video on YouTube to get the full gist of it. I got all this information for free. I didn't pay for any courses or anything. I got all the information for free on Google, just so y'all know. Not YouTube, because I know people like to spend it like how I'm spending it, but I'm only doing it to those that truly want this knowledge and this value of how to use Elliott wave in their own way, because Elliott wave can be fucking exhausting to learn because there's so much. It's so subjective where you don't even know that it could go here, but also it can go here, and you're like, damn. So 4 or 5 years of trying to learn Elliott wave, I figured it all out, and I just created the most basic strategy ever that I still follow. I don't even trade ICTs. I don't trade quarterly theories. I don't trade smart money concepts. I don't trade anything else but my way of looking at the market, because this is what I mastered over the years of trading, and this is what I want to give to you guys. So make sure you subscribe if you haven't, and if you do want our bot that does the same exact strategy, which works very well in the trend, the market, check that link down below. Other than that, subscribe, comment down below. I'll see you guys in my next video. Your boy Solo, I'm out. Peace.